Hi, my name is Gurrai Birdi. I'm a chartered professional accountant serving clients located throughout the GTA in Ontario, Canada. In today's video, I'm going to provide you the steps on how you can prepare your own financial statements for a small business for tax purposes. Let's get started. It all begins with the paperwork. First, download or print off your bank and credit card statements for the physical period of the company. These statements contain all the business transactions that occurred throughout the year for the business. Put together all the cash receipts for transactions that were not paid from the company bank account or credit card. Use a free online accounting software such as Wave Accounting. There are many other softwares you may choose from as well. Avoid the Excel spreadsheet approach. In this day and age where we have sufficient technology and easy to use powerful softwares, I discourage clients to use spreadsheet financial statements simply because they cannot be used in an audit due to easy data manipulation. For example, you can easily override or tamper a formula in Excel to add up only specific rows or columns, whereas in an accounting software, all financial statement reports are pre-programmed and cannot be altered by the user. The next step is doing the bookkeeping for the company. I would advise to watch tutorial videos on your accounting software for quick and easy setup and use. All popular accounting software have the feature to import your bank statement and credit card statement instead of manually entering the transactions one by one. Either method can be used, however, the import function is the most time efficient. You will need to classify your transactions from the bank and credit card statement into accounting categories for presentation and interpretation purposes. As you classify the expenses and sales transactions, apply the HST tax code to the applicable transactions. This allows the software to keep track of the HST you collected on sales and HST paid on expenses. Make sure, as of the year-end date, the account balances in your software for the bank account and credit card account match your actual bank and credit card statement amount. This ensures no transactions have been missed. If there is a discrepancy, match the balances month by month to see in which month specifically the balance began to not match. Investigate that month in detail to resolve the problem. I'm going to provide you tips for things you should consider while doing the classification of the transactions. This will ensure your statements are accurate and professional. Certain expense transactions cannot be deducted 100% in the current year. Instead, they are capitalized on the balance sheet under assets. These assets are amortized over a period of years using a method called the straight line or double declining method. For tax purposes, it is depreciated based on class rates. Some example expenses can be computer hardware, furniture, equipment, and tools. Transactions that represent money you withdrew for your personal use should be classified as a dividend or salary. Speak with your tax accountant to advise which is best for your situation. You can also watch our video on this topic for more insight. If you use your accounting software for invoice preparation as well. Review your accounts receivable balance as of the year-end date. This will ensure you do not over-report your sales and pay more tax. Transactions you paid personally on behalf of the company should be recorded as a shareholder loan. The company can pay you this money back and deduct it. You will receive this money tax-free. When classifying sales transactions, make sure you do not put the money you loaned to the company as sales or put expense refunds to sales. This will overstate your sales and you will pay more tax. Accrual expenses are expenses your company has incurred but has not paid yet. It is very common to have vendor invoices in the last month of the year end that will be paid early in the next fiscal year. It is important to record these expenses for presentation purposes and also helps to minimize taxes. It is common to have uncollectible amounts from customers. These can be written off as bad debt, which will reduce your taxes. Speak with your tax accountant to record estimates if you are unsure. Make sure on meal and entertainment expenses you claim only 50% of the HST paid. This is a common pitfall in an HST audit. Review your HST ledger to ensure the HST collected and paid is correct, and you did not accidentally miss applying the HST tax code to a sales transaction during the classification phase. Record amortization expense on assets as it will minimize your taxes. Your tax accountant can also record this entry for you due to its complexity. Now that you have completed the bookkeeping for your company, you are ready to export your financial statements. Your accounting software can easily prepare and export the following statements. The balance sheet as of your year-end date. This report shows the company assets, liabilities, shareholder equity, and retained earnings. The company income statement for the fiscal period ending. This report shows the company revenues and expenses. The trial balance as of the year-end date. This report shows all balances from the company ledger accounts. It is basically the balance sheet and income statement combined together. The general ledger for the fiscal period. This report shows all the company ledger accounts with details of the transactions within each category. The sales tax report for GST, HST. This report shows the HST collected and HST paid. Forward these financial statements to your tax accountant, who can utilize them for the tax preparation of the T2 corporate income tax return and HST return. You can also watch our video on how to file a T2 corporate income tax return if your company is very simple. I hope you found this video helpful. If you require assistance with your company bookkeeping, I encourage you to reach out to me. I would also encourage you to visit our website at birdi.ca, where you can schedule a free consultation to discuss your situation. You can leave a question on our tax forum, read our blogs for great tax tips. Most importantly, don't forget to subscribe for more tax tip videos on the way. Thank you for watching.